I think the most important piece to keep near you is your barterable position, which would include some cash that's outside of the system. And then for my barterable position, my preference is mostly silver, but then some small fraction, also some smaller pieces of gold too, for some different things.
2021 has been a tough year and a disappointing year for profit-seeking precious metals investors. Gold was held back by rate hike and their positive ripple effect on the US dollar. General confidence indicators are high and market volatility is low, suppressing demand for silver and gold. And yet, the fundamentals of the silver and gold thesis continue to improve. Sentiment indicators and technicals are slowly pointing to a resumption of gold's long-term rally. In today's video, we're going to tell you about how you can create a master plan with gold and silver for upcoming recession. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. We're at the end of a huge debt bubble, but it's still not very visible to most. When we look at the currency, there are basically three ways to value a currency. We're up against another currency, and then it's just the most beautiful horse in the glue factory. Gold is that money. This is the other side of the coin, and that is the only thing that can really protect us as we move through this cycle. There's so many common signs that we see at each transition in the life cycle of a coin. Some may not agree that we're moving into the digital age. That is much bigger than the transition that we've seen, and we agree with that as well. They took us from crisis to crisis, keeping us completely off balance. It's not true with silver, but it's true with gold because our wealth was stolen from us from the day we were born through inflation. If we look around the world, there have been a number of countries that have confiscated gold even in more recent times, like India, that was conquered in 2016 when they demonetized 85% of their currency. No matter where we live, when we are in a regime that has systematically stripped us of our wealth, our jobs, our everything, our freedoms, which are really important. The spot market for gold is at least $3,000, and the spot market is just a manipulated contract. It's so cheap and easy to do. When they decide to confiscate, they want our cooperation. They know very well that they will reset the currency, and most people are blinded by those numbers, and it's only worth $2,000 or $3,000. The big problem for most people is that they're blinded by the numbers. When it's so critical for us to see through those numbers with so much meaning, we must think about it. So there are all kinds of gold and all kinds of silver, so it all has to start with our goals. And when we say, should you keep a third? Well, the most important piece to keep close to us is our barterable position, which would include some amount of cash outside of the system. And then for the bargainable position, most silver is preferred, but then a small fraction, also some small gold coins too, for a few different things. In 75% of all market downturns, the value of gold has increased significantly. Therefore, it can be assumed that holding gold during a recession is a good idea. Historically, the value of gold sometimes declines initially at the start of a recession. However, it's realistic to expect that in most cases, it'll recover and increase in value during the recession. History indicates that this point can be a fantastic buying opportunity. Silver has not held up as well during stock market declines. In reality, silver only rose in one of those S&P sell-offs. This is probably due to the high industrial use of silver. Therefore, a drop in industrial production can cause the demand for silver to fall, as well as the price. However, it's important to note that silver prices fell much less than the S&P averages. It's also important to note that silver's biggest rise, plus 15% in the 1970s, came in the midst of its biggest bull market on record. It's always a good idea to create a diversified portfolio. This includes stocks, bonds, real estate, and precious metals. The best time to invest in gold, silver, platinum, or palladium is when the stock market is strong and precious metal prices are lowest. Then, the investors can reap the rewards of a recession. That's all for today. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.